Will Apple be the last US tech giant left in China? Hello everyone and welcome back to our channel TechZone. Do you know why Apple is the only US tech giant left in China? Here you go with this video. It's a period when all of America's tech behemoths, including Facebook, are headquartered in China. Apple's extensive footprint in the United States is becoming increasingly noticeable nowadays. Microsoft is still active in China, and it stated this week that its social networking site LinkedIn would be shut down in the country. Employers disconnected, claiming that complying with China's country is growing more complex. In the United States, Apple has concerns with personal censorship. According to the BBC, Apple's App Store has deleted the well-known non-secular app for the remainder of the week. It was revealed that the Amazon-owned Audible and Yahoo Finance apps had also been withdrawn. Apple censorship is a video app that shows the App Store and claims that the number of apps banned this month is steadily growing. So what is the situation with? Since its February highs, the Chinese-era behemoth has devoured a total of $823 billion, and escalating crackdowns on Beijing stadiums have stoked investors' concerns that the sale is not yet complete. On Tuesday, authorities issued a broad warning to the country's largest agency, promising to monitor information security and remote listings. Tencent Holdings Limited, Alibaba Group Holding Limited, JD.com Inc., Baidu Inc., Meituan Inc., Tencent Holdings Limited. On Wednesday, the Hang Seng Index, which includes many of China's major IT companies, plummeted 1.9% for the sixth day in a row. Tencent and Meituan plummeted 3.7% in total, making it one of the Hang Seng Index's worst drops. Alibaba has lost 2.1% of its value. On Tuesday, China's extensive vigilance watched a security assessment hole discovered by national network regulators for the rest of the week that reached Didi and encouraged the App Store to rectify it. The move astounded merchants and business professionals, striking a friend stock in Hong Kong with Tencent, undoubtedly one of Didi's most prominent backers. In contrast to the Chinese network behemoth, which began with the collapse of the mega corporation Ant Group Co. in November, President Xi Jinping's larger marketing strategy is a complete study of current security primary grounds. I'm terrified of bringing the campaign to a new level. An antitrust inquiry will follow Alibaba and Meituan's IPO. Over the weekend, Justin Tan, Asian Studies Director at United First Partners in Singapore, argued that China is still indexed in New York by different agencies, Full Truck Alliance Co. and Kanjan Ltd's portfolio. Moreover, stock fees are more likely to be triggered by short-term sentiment swings than by employer fundamentals, according to Gianchi Cortesi, the fund regulator at Zurich-based GAM Investment Management. Reviews, on the other hand, might be appealing. Tencent, Alibaba, and Baidu Inc., part of the first Chinese technology company to go public and the largest exchange, with average revenue of $22 in the next year. According to Bloomberg, this is comparable to the 26-instance 10-year standard. This is an unparalleled chance to invest into a fast-moving Chinese network agency at a very favorable rate if market sentiment turns unduly gloomy and the Hang Seng Index falls 20% from here. It's possible, Gianchi of GAM explains. The Hang Seng Index has dropped 31% since its February highs. In June, mainland Chinese investors became a crucial online vendor, accounting for almost one-third of Tencent stock transactions that year. It's good business for the devil. In China, though, Apple takes precedence over Microsoft. It is tightly entwined with the United States, far more so than any other U.S. technology employer. Apple made about $15 billion in sales in China and Taiwan for the rest of the quarter. This is an incredible figure. Its whole global supply network is reliant on Chinese manufacturing, and as a result of its presence in China, Apple is well aware that it must adhere to U.S. regulations, even if this entails censorship. You might wonder why Apple would promote hardware in China while ignoring the App Store. The issue is that Apple considers the App Store and the iPhone to be inextricably linked. Therefore, you don't have to create a precedent for side-loading applications, which allow users to download apps to your iPhone without going via the App Store. For one thing, it has the potential to earn far less money. As a result, if Apple wants to market its products in China, the App Store must remain operational. Apple has been running applications for years and has effectively restricted the App Store, Webster claims. However, Griffith argues that at some point during Apple's tenure, U.S. censorship tightened. He responds, "Apple has done so much here. It is not true that an app quits when it is uninstalled. It is a secret plan. It was pre-written on the wall as Microsoft, according to other agencies. After suspicions evolved into actual Chinese cyber attempts, Google removed search engines from China in 2010. The employer expressed dissatisfaction with the searches filtering. With Microsoft's exit from LinkedIn, Silicon Dragon's author Rebecca Fannin says Apple has become a huge target. Apple, on the other hand, she believes, will battle to stay in China. Apple is currently the market leader in China. However, due to these difficulties, she explains that I do not see Apple leaving China anytime soon. What we don't know is what happened behind closed doors between Apple and Chinese officials. So, that's all. Stay tuned and subscribe for more.